Records were broken yet again. So home prices in California just increased to a new all-time record high for the month of April based on a brand new report. I have a lot to share in today's video. I'll provide some context regarding some potential reasons why we have all-time record highs for home prices at the statewide level. And by the way, this is part one of my two-part video series I make each and every month, because part two will be based on countywide level stats in California, but today's video based on the state as a whole. So let's go ahead and dive right in. Just posted on May 17th from CAR. California's housing market rebounded in April as sales rose on both a monthly and yearly basis, while the statewide median home sold price exceeded $900,000 for the first time ever, setting a new record high. So here's some slides I want to share with you guys, and here's a snapshot overall what we're seeing this April compared to April of 2023. This video, by the way, includes only existing houses and also single family houses as well. There's one slide I'm going to share regarding the condo market. But in case, this excludes multifamily. It also excludes brand new home construction. So the increase in home sales this year increased by 4.4% from April 2023. This is the seasonally adjusted annualized rate, which is at $275,000 right now. Again, the median sold price rising over $900,000. It's at $904,210. That's up a whopping 11.4% year over year. Again, I'll share some thoughts regarding this, why we're seeing all-time record highs right now. The unsold inventory index, or the month supply, is at 2.6 months, a small gain of 4% year over year. Days in the market is at 16 days. So on average, houses selling very, very quickly in about 2 weeks' time on average. That's down 20% from 1 year ago. So in other words, houses selling about 20% faster this year from 12 months ago. Let's talk about home sales, and then we'll also describe some trends regarding home prices overall. So it says sales bounced back mildly as rates receded or decreased. So home sales rose by 4.4% year over year and increased by 3% month to month. That is seasonal. We tend to see an increase in home sales from March to April, and especially during the spring home buying season. But overall, looking at the sales level right now at around $275,000, again, that's seasonally adjusted and also annualized as well. This is well below pre-COVID levels. So for example, back in 2015 through 2019, we had around 400,000 houses being sold each month approximately on average, compared to only 275,000 this month. What I love about their updates is this right here. They provide the level of home sales by price range. So this is an increase compared to 1 year ago by price range. So for houses that sold this April, they actually were for over $2 million. That was a giant increase of 53%. Houses that sold in the range of $1 million to just under $2 million surged by 34%. 750 to 999,000 increased by 13%. In contrast, houses that sold this April for less than 500,000 actually decreased, down by 5% in the range of 400 to 499,000, 300 to 399,000, a decrease of 11%. So we're seeing a decrease in the more affordable range and a surge for more expensive houses, especially over $1 million. Also, according to the California Association of Realtors, this is something I've been talking about on the channel for a little bit now, because the mix in sales is not the sole reason why we're seeing an increase in home prices, but it actually is one of the reasons why prices are on the rise. So according to CAR, sales in the 1 million and higher market segment surged by 40% year over year in April, while in the sub $500,000 range decreased moderately, down by 8%. So sales over $1 million surging by about 40%, whereas sales for less than $500,000, well below the $900,000 median sale price, decreased by 8%. And according to CAR, the growth in sales of higher priced houses continued to provide upward support to the statewide median sale price and was partly responsible for the solid increase in the year-over-year growth rate at the start of the second quarter of this year. So what we're seeing here is that this is not the only reason why we have all-time record highs, but it actually is one of the reasons though, because we have a big increase in luxury home sales. I should say sales over $1 million. I mean, a home sale of $1 million in the San Francisco Bay Area is a fixer, but in other areas, it's a mansion, right? But overall sales for over $1 million surging by 40%, whereas we're seeing a huge decrease in sales in the more affordable range. We're also seeing that according to the National Association of Realtors as well, because according to them, this is for the month of March. I'll have an update regarding April's numbers next week. So in any case, for March compared to March of 2023, for home sales on a national level for over $1 million, that increased by 14% year over year. In the range of $750,000 to $1 million, that increased by 5%. But for houses that sold for less than $750,000, they actually reported decreases overall. And keep in mind, the US median sold price is around $400,000, but in the range of $250,000 to $500,000, that fell by 8.1%. So sales in the more expensive range are surging, whereas sales in the more affordable markets or affordable price ranges are actually decreasing quite a bit. Additionally, going back to CAR's report for the month of April, for sales for over $1 million, that represented 36% of all home sales this April. Last year, this time, it was at 30%. Now, here's another way to look at this. Here is the growth rate in sales by price segment. The dark red line is sales for over $2 million. This is the year-over-year change. So we're seeing a huge growth rate of sales for over $2 million in red. And the blue line right there, let me just see if I can zoom in here a little bit because it's so small. So sales for in the range of $1 million to about $2 million also increase as well. But sales in these more lower price segments actually decreasing or not increasing as fast compared to luxury home sales. Here's yet another way to look at this. According to CAR, the mix in sales continues to support the median price growth in California. So right now, for at least for the month of April, 36.4% of all home sales were for over $1 million, and sales for less than $500,000 was only at 22.4%. So a high share of houses that sold for over $1 million compared to houses that sell for less than $500,000. Also, according to CAR, at 36.4%, the share for over $1 million, that's the largest share in at least the last 5 years as well. What's also pretty astonishing about this as well, look at pre-COVID levels. So back in 2019, the share of houses that sold for less than $500,000 was approximately 45%. Houses over $1 million was approximately 15 to about 20%. Now we have more houses selling for over $1 million compared to not. And again, this is not only the reason why we're seeing the growth rate in home prices overall for the state, but this is likely impacting overall the statewide numbers here. Okay, let's change gears slightly here and talk about pending home sales, a measure of future closed home sales in the next 1 to 2 months. So that actually decreased by 4% compared to April of 2023. We did see an increase of pendings to start the year, but now we're actually moving in the opposite direction. And we have been seeing negative numbers starting in the spring months of 2021 through late 2023. A small increase to start the year, but now decreasing once again. This implies to me that we'll see a low level of closed home sales in the next coming months. Also, in regards to pending home sales by price segments, we're also seeing the biggest increases for over $1 million as well. So houses in contract right now, we're seeing more in the more expensive range compared to the more affordable range. So looking forward, we'll likely see this similar impact or similar trend. We're seeing more expensive home sales in the upper range of the market and less in the lower range, which will likely impact the overall statewide numbers. Now, speaking of home prices, again, we're at $904,210, up by 5.8% from 1 month ago, a giant increase of 11.4% year over year. This is a new all-time record high as well. And of course, I have a lot more to share regarding that. Here's based on my own analysis of CAR's data. These two columns is what I pulled from their website. Everything else is based on my own analysis. So this April, we're at 904,000, up by 11.4% from a year ago. The previous all-time record high was set back in May of 2022, when at that time we're at $893,200. Now we're at $904,000. So we're about $11,000 higher than the previous peak. This 11.4% gain is much better than the 8.2% decrease we saw last year compared to April of 2022. This also marks the 10th consecutive month of year-over-year gains after 8 consecutive months of decreases. This 11.4% gain is actually higher than the long-run average as well. On top of that, this is the biggest year-over-year gain since March of 2022, which is right here, March 2022. We saw a gain of up by 12.1. Now we're up by 11.4. So like I mentioned, this increase is actually higher than the average increase going back to 2010. Based on my nerdy Excel formula there, the average increase in April each and every year going back to 2010 is a gain of 9.2%, whereas this year we saw a gain up by 11.4%. Let's also talk about the month-to-month change. That is in line with what we saw back in March at 6%. This month, it increased by 5.8% compared to March. This is a seasonal uptick because home prices overall do tend to increase during the spring home buying season, but it's actually higher compared to the long-run average. Also, for comparison's sake, prices increased by 2.4% from 1 year ago. 1 year ago, up by 2.4 right there. And now it's increased by 5.8%. So the market is rising faster this year compared to last year at this time. Also, this 5.8% month-to-month gain is higher compared to the long-run average as well, which is this right here. The average March to April change going back to the year of 2010 is an increase of 3.9%, whereas this year it increased by 5.8%. But wait, there's more. I want to look at how these changes on a year-over-year basis, how does that compare to pre-COVID levels? So the change in home prices, when I mean home prices, I'm talking about the median sold price in California. Anyways, the change in home prices from April 2018 through April of 2019 is a gain of 3.2. This year, up by over 11%. April 2017 through April 2018, increasing by 8.6. 2016 through 2017, an increase of 5.6%. So the gains we're seeing this year far higher compared to 2016 through 2019. And also, just for fun, I added this as well. April 2008 through April 2009, obviously the Great Recession, California's median sold price decreased a whopping 37.4%. Absolutely insane. Also, looking at the change from the peak, the previous record high compared to the trough, this was May of 2022 compared to the trough, which was back in February of 2023. That was a 2-year low in home prices in California. So the record high from May last year down to the correction of February 2023, which is right here, 893,000 to 735,000 is a decrease of 18%. That was 2022's housing market correction, more or less. Ever since then, though, ever since the trough, which was February again of 2023, home prices have increased by 23%. And now we're up by 1% compared to May's previous all-time record highs back in 2022. Also, looking at the growth rate over the past 4 years, we're up by a whopping 49% since April of 2020. All right, going back to CAR's slideshow, let's take a look at condo and townhome prices. The only slide I have to share regarding condos, and frankly, the only slide that CAR also shares as well. So overall, the median sold price is at $688,000, 1 year ago, we're at 634,000, a big increase compared to what was this, around 300,000 we had back in 2012 and 2013. The price per square foot is at $440 overall for the month of April. That's up by 11.7% year over year. That's also a new all-time record high as well. Also, the sale price to final list price ratio is maintained at 100% for quite some time, ever since really early 2023. This means on average, for the house that did sell, they sold for the seller's final list price on average. That's at 100% right now. This, of course, is way different compared to the craziness we had in the spring months of 2021 and 2022, when at that time, houses on average were selling for about 4% over the seller's asking price. Here's also a look at the share of houses that sold over the seller's asking price. So for April, approximately 50% sold above the seller's asking price, which is higher compared to a year ago at 42%. But at 50% right now, this is still much lower compared to April of 2022, when the share was at 72.9%. So even though we're much lower compared to the craziness of 2022, at 49.9% right now, this is a 9-month high. Here's also a look at mortgage rates over the past 1 year as well. This is based on data from Fannie Mae, by the way. So for the month of April, the average 30-year fix for people with great credit is at 6.99%. 1 year ago this time, we were at 6.34%. They also provide this as well. Here's a look at your growth rate in your average monthly housing payment compared to the growth rate in home prices in California. So your average monthly housing payment increased by 9.1% from 12 months ago. Home prices increased by 11.4%. So the gain in housing payments is due to an increase in home prices, but also rates as well. One thing I want to note regarding this chart right here is that the growth rate in prices and payments is not too far off. Look at September 2022. Home prices overall were relatively flat from the previous year, whereas mortgage payments surged by over 50%. So the reason why payments were surging in 2022 was because of rates surging as well. Rates increasing by going from 3% to about 7% in one single year. That's why average monthly housing payments absolutely skyrocketed. And that's one of the reasons why home prices corrected by about 18% in California as well. Okay, let's talk about inventory levels. Some big changes here as well. Again, the month supply is at 2.6 months. 1 year ago, we're at 2.5 months. Not a lot of changes regarding that. But at 2.6 months, this is still relatively low levels, especially when you compare this to 2007, 2008, the month supply was around 16 months. Now it's only 2.6 months. And this is because inventory was absolutely skyrocketing, very, very high levels in 2007. Whereas right now, inventory is increasing, but we're still well below pre-COVID levels. And here's a look at that. Inventory increased by the highest growth rate from 1 year ago in the last 13 months. So in California, we're up by 34.4%. This is good news for home buyers. You want to have more options to choose from. And of course, when inventory tends to increase, that softens the growth rate in home prices. So that's good news for home buyers. There's more houses for sale, but bad news given the fact we have all-time record highs in home prices in California. So one of the main reasons why inventory has been increasing up by 34% is this right here. New listings increased by 27% this April compared to April of 2023. We now had 4 consecutive months of gains of new listings compared to the previous year. Before that, I think we had 19 months of decreases of newly listed houses. So this April, we had 21,055 new listings. This is still way below pre-COVID levels. Back in April of 2019, we had approximately 30,808 new listings. So this April, we have approximately 9,800 less new listings or fewer new listings compared to April of 2019, or a 32% decrease as well. We also have less new listings compared to 2021 and 2022. Let's also discuss the share of price reductions in California as well. That's at 30.2% right now, which is right here. This is much lower compared to the peak that was set back in late 2022, which, by the way, the share of price reductions tends to peak during the winter months and obviously not during the spring home buying season like we're in right now. But at 30.2%, this is much lower compared to the peak back in 2022 when the share was around 45 to about 50%. Also, just kind of eyeballing this as well, at 30%, this is more or less in line with levels we saw back in 2015 through approximately 2019. AltosResearch.com also provided this information as well. So for the week ended May 10th, obviously more updated data from them compared to CAR. The share price drops, according to them, is at 25.56%. So more or less 26%. This is higher from last year at 23%, higher than 2022 at 20%, and also much higher compared to this time in 2021 at 14%, and also at more or less 26% right now, higher than 2020 at 23%. The current share right now, though, is still lower compared to late May of 2019. Back then, the share price drops was at 29%. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys are looking for a real estate agent referral anywhere nationwide, check out my website, which is realestateteamfinder.com. Also, if you're looking to buy or sell a house in California, please email me at jason@meetjasonwalter.com. Hope you guys got a lot of value out of today's video. And of course, if you did, please hit the like button. I greatly appreciate that. Of course, I appreciate you. Hope you guys have an awesome day and look forward to seeing you on the next video.